Enjoy the silence.
Good evening, 27th of June 2022. We are facing bounce on EuroFX in those days, reached nearly 1.04 low, and we are going to see today if this movement upwards is going to be a temporary bounce, or we are going to enter it in a long-term trend reversal, as in the question. So our software, PiaFx Heimdall, can help us by make this investigation. Okay. Here we have our Setup Explorer section of the software. We are looking that we have plotted here a commercial position, net position, and down in a black line here, and down another plot with the non-commercial net position. Okay, for those who are not familiar with the COT reports, I'll try to be very short on that, are reports issued by authority in the United States, the CFCT, and is going to show the position of group of big investors, huge investors that are future contracted for their purpose. Okay, the main distinction between the two groups are commercial and non-commercials, and in this case think of commercial of companies that their gain is not coming from the speculation of the contract. For example, we are EuroFX, let's say a big company, huge company that is buying in euro or dollar, for example in dollar, and they want to cover their purchasing. Usually those companies have a contract long-term, several months contract, and they want to cover the risk of the change in value in the cross. And for example, a company that buy products in the United States dollar, they want to cover EuroFX on the downside, because it will take more euro to buy the same amount of dollars. So they are going to buy a put, or they are going straight to open short position. Okay. In the other hands, we have the non-commercials, which are financial entities, big guys with big financial capabilities, like Citibank, JP Morgan, and they want to gain money by buying and selling the contract itself. So for non-commercial, they gain with the contract itself. For commercial, the gain should comes from other stuff, other goods, and they use the contract mainly for covering. Okay. So last word about our software, and let me show you. Our software is intended to be used with multiple display environment, and some screen some part of the software you can see in a portrait mode, another in landscape mode. Usually I use the portrait mode, because what is important is to see how price is to comparing the price action with okay, let me go in another page of the software, how the price is comparing with other plots for looking for divergence or patterns. Okay, for example, here what we have here, we have commercial net, so the difference between long position and short position, okay, which is this black line here, okay, and we have a non-commercial, the other group, and net, and in blue, okay, and here in the commercial plot we have also a subplot in yellow, which is the open interest. Open interest are the number of contract, the amount of contract that still stays in the market, in the exchange. So usually we are looking for extreme point, always. In COT analysis we are looking for extreme. For example, here easily we can see that on each stream there is following a movement, okay. Here there is a movement, and the same in open interest. When we reach higher, an extreme here, higher on 8 March report, okay, and then go down, and then start another bearish movement, okay. The same here, look here, more evident, and here at this point we reach the top, and then is slump in 3 days, next 3 days slumps. Okay, what we say here is an interesting part of the software. If you make simply math, we have here open interest with the 730k, okay, 730,000 of opened contract, and which I made some math. It's we are talking about 91.3 billions of euro. Okay, one contract worth 125,000 euro. So we are passing in those week from one report to another, from 91 billion, I mean 730 contract, to 668,000, which is around 83 billions. So we are talking about decreasing the somebody decrease the contract open interest about nearly 8 billions, so 7.78 to be precise. Okay, what we have here, this plot, if you read carefully in Legenda, there is open interest spread future. So what is the spread future? Our software indicate the amount of contract that are pointing to the same financial entity that have both long and short position. Think about yourself. You are not sure. You have a short contract, a short future, and you are not sure that you are thinking the market is not going down anymore, and maybe you want to stay and look without action. So you put a long contract. So you have one short contract, and at the same time you have a long contract. This is called spread. And this report help us a lot, because as you can see, if the market show that is increasing, there is a peak on this special count of spreading, we know that the market, I mean, these operators, most of the operators, they are not sure about what's going on. Okay, so this is a good position. Usually when we have a peak like this, for those who make straddle, it's a good time to open a straddle. Okay, also if you look at volatility, you see here the price, for sure here volatility. We can plot, by the way, but we can easily see volatility is going down because it's moving in a narrow area. So after the report, you see this and then bang, you know, you have movement. The problem with the COT report is that you're getting this info late. So usually a COT is very useful for to get big movement and big trends, and because it comes, info comes and every Friday, okay, and on Friday you know what's happening on previous Tuesday, okay. So as we can see here, if I color, okay, we are coloring the bar and with the report, okay. So we know that we got this info. We got this Tuesday, Wednesday, Thursday, and Friday night. So you got the info, this peak you get here. So probably you were in time to make this, okay. Anyway, what about if I tell you that how financials and those big guys are facing the movement and in price contract change? For example, who is taking profit? Who is investing in fresh money in the contract? Who are beaten? Who taking stop loss? Okay, so our software can, thanks to the COT report and the way we are, the software is managing the data, can give those valuable answer. This is the COT accountancy section, and we can reach by clicking this icon on the left menu. COT accountancy is delivering a special weekly price chart. Each candle is representing report to report week, okay. Instead of having Monday to Friday, we have the day report to report week, okay. And this gives us sometimes, more often, I can say, more often, we are looking for shadows, and that gives that have in my opinion, give better forecast and allow user to evaluating nice support and resistance area, okay, just because of the different type of candle, which is very, very interesting. So how it works? Basically, we have the same price chart on the left and the right. On the left column, we have all plots down that is giving us the long accountancy, what's happening to the long contract only, okay. On the right side, still the price is the same, but down we have accountancy of the short position, and we can see here, so red candle here, it means that the commercials have decreasing their contract, okay, about 58,000 contract, which is huge, by the way, okay. Instead, here we have a green bar that is telling us that in that week, sorry, on the week of 8 February 2022, the commercial increased the short contract, okay, by 21,406. So this is, the green here means fresh money. They are putting the hands in the pocket and put there as a margin, and they opening a short contract. So this is fresh money, green. And instead, here, red, we have a decreasing, okay, a decreasing of contract, okay. They can gain money here, or they can lose money taking a stop loss. We will see. According to the price action, this can help us. So, what is interesting that we decide here to start on 2nd of November. For us, in this position, I consider 2nd of November a good starting point to make accountancy. It means that all computation here is starting from 0. Okay, and that week every position starts with 0, and this can help us to understand in that time frame. For example, here I want to analyze the this downtrend. What's happening in this downtrend? Is this one? In this one, they are getting money in, they are taking profit. That's why it's coming up. I want to know more. I can achieve what those financial entities, they have done. Okay, I cannot forecast the future, but I can understand what they are going to do, what they are doing, what they've done, and by looking in the past, I can learn some trick, something they are doing before big huge trend starts. Okay, so let's see. I want you to get notice about something. Look here, we have 40,000, okay, and minimum 40,000 less. Okay, this is the range. Here we have 75 and here minus 50. If we go to the group of retail trader, we have 12,000 minus 12,000. So what this means that visually we can say this bar here is the same of this one bar. Okay, actually by value it's not so far, because we have minus 40,000 and here we have minus 40,000, but for sure if I compare with this, here we have minus 10,000. So it means that this chart is good to look in this way, to have a general view, but it's not a scale. So we can show those accountancy in scale, and you can see here we have 64, 64, again maximum 64, and you can easily see that the position of non-reportable, let's say retail trader, okay, and they are quite smaller than the one that makes the commercial. For example, here look at how huge is this bar, okay, compared with the non-reportable. So now we have things in scale, and we can easily understand that here the group that is putting more money in, or moving more money, is the commercial. Okay, this is the commercial. In a few days they are moving, in few weeks and also a few days they are moving lots of contract. Okay, so let's go deeply now, and I want to focus in just two bars. I want to focus in this bar. Okay, here this is a weekly chart. So this we are talking about. Let's get back. I want to show you. Okay, this one. Okay, so we are talking about this. It's in one candle, because we have this black candle. It's the day, the referring report day, so the Tuesday. Okay, so we are talking about that candle, that bearish candle price is from this one to this one. Okay, and the other one, it's from this one to this one. Okay, so keep in mind this. It's a very important weekly candle we are going to see, and we know that we are passing from a day where we registered a high spread. So market, I mean not all the market, but at least 42,000 contract, at least 43,000 contract were spread, so no clear, no straight direction. Okay, we are talking about 40,000, 43,000 against a total open interest of 730. By the way, we are considering that some people, more than the previous week, they were uncertain. They prefer to add an equal and opposite contract to balance their position. So we are going to look what's happening from here to here. Okay, let's get back to quote accountancy. So we are here in this candle. Okay, let's increase a little bit the height. Okay, so okay, we see that, for example, we are going to face one by one. So here we are. Okay, we know this. Okay, in this candle we know that commercial, they decrease the position, their long position. How you can decrease a long position? By making a sell. But this sell is not a sell, a new position. Okay, you are going to they are going to close the previous long position. Okay, so we can say it's not correct 100% because we don't know the contract that they closed when they was open, at which price level they was opening. But I'm telling you that if I see the price going down in the week, and if I'm going to close my long contract, I'm going to take I'm going to making a stop loss. This is the logic that I'm going to consider. Okay. On the other hand, commercial, look, they make a huge reducing of the short contract. What they are doing here, they are reducing a huge amount. Okay, and they start to adding fresh money here, green, 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 green. Okay, we can say they start to adding green here when the price was around 1.11. Okay, and they adding short, adding short, adding short, adding short, adding short. Okay, here, and then they decrease the short position. So as the price going down, we can say that probably most of them commercial, okay, they are taking money from there. They are taking profit. Okay, so commercial, they adding value to their short, quantity, short contract quantity, and the price during they were adding fresh money until here, but the price went down. Okay, so if they reduce, the price also going down. Okay, then getting money in. Let's analyze now. We can have a special view here called Go Solo, can help us. Now we consider only price with the non-commercial. Okay, great. So what we see now on this week, we see that price going down, and those people also they are reducing their long position. Also them non-commercial here on this side, they are losing money. They are closing position and they are stopping loss. And in the other hands, very important, the only fresh money of the four point of view, it's from non-commercial. Look, price going down, and what non-commercial is doing? They are adding fresh position. They are putting hands in their pockets and securing margins to opening new fresh short position. And look, we have the same, if we consider this 0 point, okay, we have the same exposure on the short side than 23 of November, but the price went far down from 1 point, let's say 1.14, something 1.14 of 23 November week, and then here we are on 1.05, let's say 1.048, okay, and still they keep believe in euro to going down. Okay, so remember, those people, those financial entities, they don't need to cover. They adding they're adding short contract because they believe they want to gain in the future, because they think euro will go down. Okay, great. This is an important info, in my opinion. We know more. We are not forecasting the future, but we know those people, what they are doing. And let's have a look on the next week. We had a bounce. Okay, so this is the key point of this video. Is this a bounce or this is a trend reversal? Okay, from non-commercial, from speculators, this is a bounce, because we know that, you know, they are not scared, getting scared. Okay, they have want to maintain, they want to hold their exposure in the short side. Okay, and in this case here we are a decreasing of open interest. So here we have shorts that decreasing the long position. So it's going up. Why it's going up? For sure is the commercial. Let's see, go solo, commercial position. So I think they are the commercials, they are putting fresh money here. Here we see this. Here's the commercial, they are putting fresh money in, okay, on this bounce. But we can see commercials, they have no interest in covering. Okay, they are not interested in covering on the long side. Okay, and so it means that this is a technical bouncing, and we need to expect in the next days probably euro, according to what it says here. Okay, of things can change, but according to this analysis, and euro, this is a bounce. Okay, we don't know when, but it can go down again. We don't know at which level. Let's have another look on a long range. Okay, this is the same code accountancy but with a wider time frame. We start here 7 April 2020. We have seen here reaching higher 1.24, 25, and then going down. But see here, I want you to look here, non-commercial. We are not a scale here. Let me go in scale. It's very important to look at scale. Initially looking not at scale. Okay, 179. Okay, we are in scale now. Look, the speculator, Citibank, JP Morgan, I don't know who, but those entities, financial entities, they are never stop believing euro is going down. Look, it's since here there is a cross according to this this count starting from early April 2020. Okay, 0 0 0 starting from 0. So from that time it's going down, but then they are increasing their short position, and actually we are at maximum level. Okay, so we have an absolute value of, let me see, nearly 130,000 absolute contract that is short. Okay, well, nice. And I finished this video now. Please, if something need to be clarified, don't hesitate to contact me, and please take the opportunity to subscribe to my Telegram channel, and send email whenever software is going to be launched this year. We are adding some special feature in like open interest in the code accountancy. We believe, and we have tried, we have used it, by the way, as a retail trader, and it's going to help a lot to understand what's happening in the market. Okay, thank you very much for following the video. Thank you. Bye.